Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, October the 10th, 2022. The markets did trade in a tighter range, of course, than they did on Friday. And we started in Globex by kind of in a very narrow range on Sunday, but ended to begin to buy it as we got closer to the U.S. opening. Once we were open, we did move to a new low in the NASDAQ. We did not do it yet. New low for this particular sequence. So it drifted below Friday's 36.17. Actually, it would have been 36.18 low. And that was achieved this afternoon at, at 3,600 even, which we had pegged as support simply because it is a round number. And we have additional support just below at 35.89. Now, focusing back here on the S&P and what the count is. I'm leaving this as minor wave one, but I'm going to address the fact that it could be an intermediate wave three, intermediate wave four, and coming down, and an intermediate fifth wave, of which this is just the very beginning. And so that still sits out there. There's others that now are agreeing that this being minor wave one is really pointing to a much stronger third wave down right now. And to tell you the truth, yes, that is what I believe is actually picking up more support in terms of being the case. So I'm going to leave it there with the following thought, that what a lot is going to count on for this week. And again, I'm not actually trading in advance of it. So if you position yourself, you're going to have to do it wisely, because if I'm thinking that we really are going to tumble down, I think eventually we're going to get to much lower levels. But there are going to be days, like I'm going to present right now, that we're going to rally. And I believe that we start to rally here in Globex, and it just continues tomorrow, by the time that our opening rolls back around. I do believe that we will continue to rally it. But here's what I think is happening. So if we're going to leave this as minor one and this is minor two, then what I'm looking at here is this is going to be minute one of minor three. And now we have a bounce, just a counter trend rally. And so first thing I want to do is just go over again. Minor three projects to 32.16, if not below. We have additional at 3,200, and we have 31.50, I think, is in there as well. We have additional support coming off. We have support down to 33.45. And then we get that larger break. But we're looking for a minor third. Minor third, I'd be looking for it to come even lower. So if we get into a minor three and we can get down even close to that, put in a minor four and then a minor five coming back, but just maybe not exceeding it by all that much. We finish the third wave, we put in an intermediate fourth, and then a fifth. So we still have a fair amount of downside to put in according to the counts that we're using. And even if this is going to switch over and become intermediate wave three, and this is going to be intermediate wave four, then subjectively, what we're now entering into is an intermediate fifth wave, and these are just the beginning stages of that wave. So even within that context, there's still a fair amount of downside. If this was an intermediate fifth wave or a minor third wave, there's still a fair amount of downside to do under either. So what the difference will come, or where the difference would come, is that once it is all complete, what then comes next? Is it then finishing the larger? And I'll go into that as it's running so that we can take a peek. But right now, I do want to focus on tomorrow. And I'm going to first take off these fibs. Those are extensions for that minor third. And let's take a look at this. So let me go back and do that. And now open it up. There we go. So what I want to take a look at, this is where we're going to be rallying from. And I believe I would take it from there. And I've got that. So that high down to that low. And if indeed that low did put in this first minute wave 1, or the first 5 down, we're now looking for 3 up. And our minimum would be up here towards the 50s. We need to get above the hourly 20, but then we have resistance at 36, 51, 52-ish, right around in that area. And then we run into the 50s, the 50 EMA and the 50 SMA plus Fib 382 resistance. So this is high. This has got a pretty high probability right now that this is at least where I believe an A wave is going to come, or a bounce should come into here. If not, back towards 3,700 and towards the 200s. Now, as a wave 2, we know that it can get up to 618, but that's going to be in a pretty strong push. And again, we've got some, and they could do it, but we have PPI on Wednesday and CPI on Thursday, plus jobless claims on Thursday, retail sales on Friday. And while in my mind it's telling me I would not really be expecting to see signs of all of this inflation coming under control, that the interest rates are working, et cetera, et cetera. I really would not look for signs of that happening, because I don't see any signs of it happening. So, as I've discussed yesterday and also the day before. So right now, I'm thinking more of just a normal bounce, and I'd be looking for 36.83 to 37.10. Those would be legit, I think, targets. Once complete, then I think we have another pretty strong down day. So tomorrow, maybe it's an up day into here, and then PPI gives them a little bit of a shock and it comes down. CPI gives them the kick and it keeps going. So, but right now, let's get through this. And this is where these are the lines. Once that happens, then I would be looking for this. And that's saying that this completed the small little 5 down. For all I know, that might have completed it. And this is there. And it comes back down, or goes up and comes down. And we're now working a more complex little 5th wave down. So I've got a couple of possibilities for downside, and with the majority kind of pointing that we should bounce. So that's what I'm looking for here. Those are the levels. Downside, we just went over it. There's plenty. And first thing it would do is get itself below 35.71. That would be good. Now you got 35.50, then you got 3,500, and then we have some others down in here as I had up before. And those were the extensions, Fibonacci extensions, and I've been doing them off of this 4-hour chart. You could also use the daily, but what you're looking at is we're trying to get that 3rd wave. If this is 1, you take it from the top where wave 1 began down to there, up to this high. That's going to give you the extensions for support for a 3rd wave, that minor 3rd wave. Okay, so over to the NASDAQ. Going to be the same story, but the NASDAQ actually did break. I'm going to just go ahead and start here. There's wave 2, intermediate wave 2. Here is what I'm still labeling as minor wave 1, minor wave 2. Now we're dropping in the 3rd. Again, 1, 2, 3, 4, 5. Minute wave 1 likely complete, and it was much cleaner. It was much cleaner in the NASDAQ than it was in the S&P. S&P did not make a new low, whereas the NASDAQ did. And the new low below 10,880, 10,890, basically 10,891. And it got down to, I believe it was 70 something. No. Yes, 10,877. So it was enough to put the finishing touches on this small 5 down, and let us know that there's likely more. There's 5 down, you're going to do 3 up, and then we got another 5 down, and that would be a minimum. So I'm going to say that yes, we will continue to head lower, but right now we're going to bounce. So let's take a peek first at what we have for downside. Once we can break additionally below where we were today, so 10,876, then we're dropping it to 10,685, then it drops to 10,438, 10,257, 10,088. These areas, yes, depending on the pattern, what is actually coming in. But I would not be surprised if this really starts to drop us cleanly. And maybe that happens this week, and or it's going to be a combination of Wednesday, Thursday, Friday, and then beginning of earnings. So right now there's a lot of positioning or posturing on what to do. We've got earnings coming up, so you're going to get all the pundits that are going to toss things out because they can get into the news. So, yeah, I've got to allow for what I believe is going to come through to actually come through, no matter which count we're under. If this is intermediate wave 3 and this is intermediate wave 4, and we are in the beginning stages of the intermediate 5th wave down, that will be 5 waves of minor degree, and I'm counting this as minute. So, minute wave 1 of minor wave 1 of intermediate wave 5. That's what that count would look like. Both really pointing to stronger downside now. So based on that, then I'm looking at these numbers going like, well, I don't think they're going to show anything that's going to be so earth-shattering that we have to buy it up 1,000 points. Right now, I do not see that. So I just see more angst, anxiety spreading, just too many things that are sitting out there unsettled. And, and then other things going on in between. It's a pretty wild time. And a lot is coming to a head real quick. And the market, because it's us, has no clear idea what to do. So it just tries to play it technically. And it's going to do that. So in the meantime, I'm going to take this down. We're going to take a peek at what the fibs tell us for this small second wave. Okay, so 382 is 11,200, we'll call it. That's just 382, and that's pretty reasonable. And it cruises up, gets past the 20, gets up to the 50. So again, just like in the S&P, we have the fibs and the 50s, the hourly 50 SMA there and the EMA here, all approximately in the same territory, 25, maybe 30 points apart. This is coming in at 218, 11,218. The EMA is coming in 11,175, and the fib is 11,200. So we get a little bit of a zone right there. And that could contain the whole thing and just turn this thing and go boom, boom, boom. So if we kind of go up there tomorrow, we'd be up over 100. Healthy. And it could go even further because what we have sitting behind all of that is the next fib at 11,300. So we got about 100 points. And then behind all that, we have the hourly 200. We have the SMA sitting bottom at 11,353 approximately. And then we have the EMA at 11,378. And then we have 618 just to tick above that at 11,400. So we got 11,200, 300, 400. Those all come into play. They really do. And in a 2, they really do. How hard they want to go for this tomorrow, it's again, everybody's posturing. And so it's as they come in and out of particular stocks, and actually a lot of them in the NASDAQ right now, again, remain Apple. Amazon, AMD, but AMD is pretty much directional, like hitting the skids. We have Google. We have Metaverse, Microsoft taking it on the chin again. In NVIDIA, Netflix wants to go up. So we've got a lot of play going on. And so to see if they really kind of push, if you kind of watch the correlation of those, a lot of those stocks and the movement in the market, you'll suddenly see that somebody's coming in and they're just really buying up some futures, and you're looking going like, oh, they're stepping in and they're just buying the NASDAQ. And so you can figure out your own weighting. You know, the people, their computers are much, much quicker. But it could be the quickest ride. It could be a fast little jump and it could slide all the way back down. But in any case, I'm looking for a small ABC structure to the upside. Those are the parameters. I'm going to tell you that right now, I'm feeling that having the bigger count can get in the way of being able to trade a 150 to 250 point move from current levels up to finish an ABC up. Again, if you're trading a smaller account, and even if you're day trading and you decide you're going to start shorting now, or you're going to short at 11,100 or 11,150, et cetera, or you start shorting at 200 and it goes to 300, that's 100 points. You know, and it's at $20 per point. So, you know, can your account take it? So in other words, my concern, or not my concern, but my encouragement here is that you have to stay with what's in front of you, because the moves, while we're not looking for anything too high, it still can blow out your account if you're on the wrong side. That's kind of my point. Trading smaller accounts and sitting with a position that you know ultimately is going to make a ton of money. But in the meantime, you're going to be down $2,500, $3,000, $4,000. And a lot of places won't deal with it. So, you know, it depends. It depends. It depends. Okay, so if the market were to turn from here, then it's just continuing in this smaller, and this is going to make just a little bit bigger of a 5. I don't know if you can see what I'm talking about there. So let me just put this up. It would be here. So instead of this being all of it, so if we're coming down going 1, 2, 3, 4, 5, then it's like 1 of 5. And it's just 2 of 5. And we start tumbling and we break there and we keep going. And we're just going to be, then we quickly, all right, you quickly put the other fibs back up, which are the extensions from the top of minor 1 to the bottom of minor 1 up to the top of minor 2. And that'll give you the balance of what minor 3 can come in. We've already talked about it, 10.5, 10.6, 10.7, they're all winding up. And it could go sub. Eventually, we'd be looking for it to go sub 10,000. Again, that's a count that I'd had forever. But stop talking about it, because if people are suddenly looking for it, they're going to start to try to trade towards it. And since I really started talking about it several months ago, and we're still working our way down to it. So I thought, stop talking until we get there. Then it'll make sense. So anyway, looking for a little bit of a bounce and then a continuation of the downside. Our next update will be on Tuesday, October the 11th.